Hello, welcome to FountainFX on Monday the 5th of May 2014. We are looking at the economic data that's due out today. A couple of things just to note is that Japan and the UK have got bank holidays today, and therefore there's no trading from Tokyo and there's none from London, which is a big volume in terms of trades that are going through, so we need to see how that's going to impact the market. So really the trading opportunity is going to be this afternoon with the US dollar and the New York market when that opens. So we're really going to be looking at after around about 2 o'clock today for any movement. Let's just see what's happening at the moment. And looking at the daily chart of the Euro US dollar, we can see that price has been pushing up. We've got some bearish pressure today since it's opened. Price gapped up from the close on Friday. We can see that Friday there was a price did push all the way down to just above the 138 and then turned and reversed and pushed all the way back up again. So if we go and have a look at what happened on Friday, that would be cool because that was the non-farm payrolls day. But we can see here that there's some selling pressure because of that, but there's also buying pressure pushing it back up. So it's in an area of indecision. Price is also broken above this trend line. But the other thing to note is it hasn't broken above this previous high, which is here at the 139.03. So it's just below there. So potentially it could be a turn. We need to wait and see exactly what's going on. So let's just go and have a look in a smaller time frame. And we can see that on Friday we had a big collapse and then turn and reverse. So within a spate of a few hours, price fell from the 138.70 area all the way down to the 138.10, turned and went all the way back up again. We'll have a look at what could have caused that, but since then we're really looking at prices been going sideways this morning. Not a lot of activity, which we can see, and that's because London's not trading. That's 40% of the market that's not active at the moment. So let's just go and have a look at what happened on Friday. And at 2:30 was when non-farm payrolls was due out. So the close of this candlestick here, this spinning top, which shows indecision, and that's expected because people pull out the market. There's a lack of volume in the market at that point, and therefore you get an indecision because it's waiting for the major news. And then non-farm payrolls data came out, and it was very positive for the US dollar. In other words, unemployment fell by 0.2%, which was quite a big move. And also there was a huge job creation, about 80,000 more than expected. And the reaction is that price fell from this level here, which is the one at 38.61, with the open of that candlestick, and it came all the way down to the 138.15, closed at 138.18. So if we look on this one candlestick alone, which took only 15 minutes to be created, we look from the high of the 138.63 down to the low of the 138.14. So that's 50 points basically, 50 points of movement. So that would have been a nice trade to have taken an advantage of that. How could you have done it? Run a trend line from the bottom and run a trend line from the top here. So we're looking here. So when you get a break of those trend lines, break outside of that channel, then you look to take the buy or close outside. Obviously this point and that did not close, that just collapsed. If we go into a lower time frame, in the lower time frame, the time of 5 minute, you can see the actual momentum with which the collapse happened, and it did virtually do the whole movement within the first 5 minutes. So that's quite an incredible change. That's a great reaction. The only way to have traded that would have been just to have seen the positive news for the US dollar and to have sold very rapidly. But you can see that that was a quick reaction to the market, because after that we then had a slow sideways movement, and then prices just after that just literally eaten that move all the way back. So based on that, if you missed the news, you could have taken an opportunity to have then gone long afterwards. Is it predictable? Probably not, but the point is that what we've actually got is we can just say, look, if it's not in a long, then if it is in a long, then it's not going to break this trend line, and as you can see, it didn't break the trend line. So go in the direction of the trend, take a long at that point, and once you've got confirmation probably around about here as price continues to push up. It's broken above this high here at the 138.20. So once it's broken above there, closed there, you've probably got an entry around about the 138.25 to have bought in there, and then price continued in that direction. It didn't break, it didn't pull back down. So that's probably a nice move. You'd have got around about 40 points profit from that move. And that's really it. That's the opportunity around news. There was a massive reaction very, very quickly. You could have taken that and made 50 points. If you missed out on that, then look at the fact that price just literally returned and ate up all of that move, that reaction. So and that's really it from FountainFX today. There's not going to be a lot happening this morning. Take a look at the market this afternoon with the New York Open, and happy trading.